You could be in for thousands of pounds of compensation after September 2024, as the FCA are investigating car dealership finance agreements that were given to customers during the period of 2007 to the 28th of January 2021, where extortionate interest rates were charged to you, the customer, by these dealerships on car finance. Hi, if you're new here, I'm Amelia Madu, a financial risk consultant with 15 years of expertise in the financial sector, working with some of the top banks and also an LLP. Now, it's known that Lloyds submitted its end of year accounts and has set aside 450 million as a provision for compensation of all the mis-selling of the car finance. The other good news is that this is expected to be bigger than the PPI payout back in 2019, which cost billions of pounds. So the way car finance works is that the car dealerships, who essentially are brokers, source the finance from either a bank or finance companies at very low interest rates. Then the dealership would give the finance to the customers at inflated rates so that the salesman could earn a higher commission. This was known as the Discretionary Commission Agreement, or DCA. This interest rate would differ drastically according to who walked into the car showroom at the time, which meant that the car salesman would charge whatever they felt and didn't have to declare the rate to. This was hidden during the point of sale. Often dealerships would use psychological tactics to exploit you financially, as some people had limited financial knowledge and were fixated on the car that they always desired. So interest didn't really matter to the person at the time. There were several ways the dealerships would prey on customers using this method, which was where you had a monthly budget, for example, in mind. This was ideal for the salesman, as the focus for you was not on the percentage of interest you would end up paying over the period of the finance, but the budget. This gave the salesman the opportunity to adjust figures to closely meet your monthly budget, which meant you were happy as your requirements were met and you got the car you always wanted. So, to do this, the dealership would not only extend the term of the finance by an extra year to lower your monthly payment, which increased the amount of interest you will pay back on the car finance. This also left room for the dealership to increase the percentage rate of the finance and even manipulate the figures of the deposit and change the end balloon payment to inflate the interest rate even further while still meeting your ideal monthly budget. Therefore, you were unknowingly being charged an explosive interest rate, which would lead you to paying more than you needed to at the end of the finance period. So the other tactic the dealerships would use would be where you didn't really want the finance or weren't quite sure you would be accepted. So the dealership would use this as an opportunity to take advantage by accepting you for that car finance at a low rate of, let's say, 6.9%. And then the car dealership would sell it to you at 14.9%. which would earn the car salesman thousands in commission, plus the 20% from the sale of the car. If, on the other hand, you didn't want to commit to the finance, then there were also circumstances where the dealerships would sell what they call add-ons. One of them was named Pure Guard, which would cost around about £600, when actually the cost to the dealership was only £70. This product will be applied to the car by the dealership, which would really take around 3 to 4 hours if done professionally. However, it was known that the dealerships would provide poor application and instead complete the process within half an hour. Sadly, the practice was popular with well-known makes and manufacturers without us knowing. Another way the car dealership would entice you, and you had capital to pay for the vehicle, then would tell you, well, if you took out the finance along with the money you have to pay for the vehicle, you could get a desirable higher spec car. And most of the time the customer would commit to this. So why did the dealerships do this? Dealerships did this because there was limited profit to be made in metal, and the car salesman's basic salary was low, making it difficult to meet the basic living requirements. Therefore, most of the money made would be from the commission accrued during the inflated finance made from the customers, and also these add-ons in car sales, where the dealership had retained as much profit as possible. After January 2021, due to the new rules and regulations, car dealerships must be totally transparent upon selling car finance to you, the customer, and must offer these as fixed rates. So no matter who you are, the dealership must provide you with the same offer as every other customer that walks through their doors. If you need to buy a vehicle on finance, then you can accept the finance the dealership offers, which will be at a high rate, and they will give you a discount on the price of the car, as essentially the dealership will make back that money through their commissions. You then have 14 days calling off period for the financing, during which time you can refinance at a lower rate through an independent financial body. So here's an example. I was going to purchase this £51,000 BMW X5, which has a monthly budget of £910 over a 4-year period, which includes my £2,000 deposit. Not bad, you may think, but when I broke down the figures and asked what percentage of this figure is made up of interest, I was told a ridiculous 13.9%. This means that I will be paying an extra £20,000 on this vehicle. Now, going to an independent finance company, the quote was as low as 9.9%, which means this car would be £830 per month, saving £80 a month and costing 14k in interest, which is a saving of £6,000. This process took me less than an hour to find a cheaper rate. So, as you can see, asking questions and finding other finance options with independent finance providers who are FCA registered really is worth it. If you would like to make a claim for the mis-selling of car finance for the period 2007 and January 2021, then please see the link below in the description where it would guide you to do that. If you also found this video beneficial, then please subscribe to my channel, as this will enable our community to grow and also provide you with more content to inspire you. Thank you for watching, and I'll see you in the next video.